This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Saturday, October 9th, 2021, and this is the weekend update for Canslim growth stock investors via the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. So standard disclaimer that we always have, I'm not recommending any stocks or securities to buy or sell, and you alone are driving your own portfolio. You and you alone are responsible for your own mistakes. So you need to have your rules, you need to be following your rules, not other people's tips or opinions, and then rewriting your rules when you do your post analysis, which is not really rewriting, it's probably more of tweaking and adjusting your rules as you do your post analysis, assuming you started with a solid set of Canslim buy and sell rules based upon Bill O'Neill's system. So this weekend, we'll look at the M factor, market review, and market direction, or stated another way, what part of incorrection don't you understand? We'll look at some confirming indicators of weakness, actually a whole list of them. And then I'll talk a little bit about the agenda for our meeting this Tuesday, which will be 3 days from now. So this weekend, we actually have the same clearer picture of things that we had last weekend. Still sort of a train wreck out there is the bottom line, and you'll see that when we go through the list of red flags shortly. But while it's still a train wreck, all train wrecks do get cleaned up at some point in time. So in the investing world, trading world for growth stock investors, the cleanup is a follow through day, and they might work or they might not work. But we do know that there's not a bull market that has ever started without a follow through day. So we'll be looking at those, and we're going to go through that in detail at our meeting on Tuesday. So I'll have that on the agenda in a minute. So the M factor, as we already know, this is the most important letter in Canslim. O'Neill tells us that we always want to diagnose, we want to interpret, we do not want to predict. So we're doing a weather report, not a weather forecast when we talk about market direction. There's three things we look at it to do this diagnosis. One of them is the action of leading stocks. Second one of actions of stocks owned, which right now is sort of like, wait, what stocks? We're only 8% invested in the group teaching portfolio. So that tells us something about how the market is behaving currently. Then we look at the market pulse in the paper, distribution day count, price and volume on the indexes, and then I supplement all of that with, of course, my coloring book, which we'll take a look at. So let's get out of here and go over to MarketSmith. Let's go up to the top. Look at the indexes, starting with the NASDAQ. Oh, there we go. Okay, just needed to close that panel. So we can still see that the 10 and 21 day moving average lines have crossed over and are below the 50. And then also the index is below the 50, and the 50 actually looks like it's starting to roll over a little bit. This dotted line would be 10% off the most recent top, which would get us to official correction level. And I haven't even drawn in 20% off because we haven't even broken 10% yet. So we'd have to lose the 200-day moving average for that to happen. IBD is in correction, as shown by the ribbon down here at the bottom. You can sort of see we've been red for just a little bit. Last time IBD went to red was back in March for just a few days back then. Look at the S&P 500, see the same thing under the 50 days. So this looks like it's becoming resistance. That's not a good situation. You can see it came back up to the 50 here, got rejected, came back down, has come back up to the 50 again. And we'll find out next week if it gets rejected there again, and if we get something that looks like a second leg down. NYSE, same thing, came up to the 50, hit resistance. Moving average lines are in the wrong order. 10 and 21 have crossed over the 50, so that doesn't look good. Dow, very similar. So all four of those main indexes have tried to test the 50 once and are coming back up and testing it again. If we're going to get a resumed uptrend and a follow through day, the indexes will go back through the 50 and the 10 and the 21 will come back up, and eventually the index will be trending above an uptrending 21 day. Russell, oops, sorry, go back. Actually, looks a little better. We are above the moving average lines and they've all sort of converged there together. In the S&P 600, it's going to be the same. Actually, it looks the best, probably because of the financial influences. And we know that bank stocks are doing okay now. So that's helping keep the S&P 600 up. And then two other things to look at while we're here. Let's look at ticker GMIAB. So here's our advanced decline line is on the bottom of this on the NASDAQ, and it's pretty easy to see, clear downtrend line on that. So that's not positive. We'd like to see more stocks advancing than declining. And we can also look at NASDQ in MarketSmith. And this gives us at the bottom of the page, the blue line is the 10-day average of stocks hitting new highs. The pink line is the 10-day average of stocks hitting new lows. And you can see this is not good either, because we have a lot more stocks hitting new lows than we have hitting new highs. And also we see up here, this is a 10-day average of stocks up on volume and down on volume. So we see that we're the down on volume number is trending up and the up on volume number is trending down lately. So we'd like to see, you know, in a strong uptrend, you can see what it looks like back here. If we look at the group teaching portfolio, as already mentioned, we only have one partial position. The market really did two things. It stopped us out of positions at the 7% stop loss, or a stop loss that had been raised. And then there were some stocks was trying to hold on to a little bit past the 20% profit goal, like ticker AVTR and ticker TECH. And those were coming back down into the profit goal level and the market was weakening. So went in and sold those at the profit goal, or a little bit less. Some of them may have been down 15 or 17, I mean up 15% or 17%, but not at the full 20% profit goal. So we're up 15.59% for the year, and again, we're only 7.99% invested. So that just tells us something. Canslim's supposed to pull us into good markets, push us out of bad markets. So it's actually doing its job. It is not supposed to make a bunch of money in a bad market. That is not how the system works. So let's go back. Oh, coloring book. Sorry, pull up the Excel spreadsheet that I put on Twitter each day. So several important things on here. The orange block is our 25-day window. So I treat that as the relevant time period because that's what Bill used. Because distribution days drop off after 25 days. So in this column, I label each day as an accumulation day or buying day, a distribution or a selling day, not necessarily an official IBD distribution day. You can still have a selling day or just sort of a neutral day. And so right now, the total count is only 6 buying days and 12 selling days in the 25-day window. So we've got twice as many selling days. And so I just use that, as Mark Minervini phrases it, is this an accumulation dominant tape or a distribution dominant tape? And so based on that score right there, it's a distribution dominant tape still right now. The MMTS, which I also use to help me on the M factor, is red on all 4 main indexes. So that's not good. It is yellow on the Russell. And again, the S&P 600 has held up because of the financials. IBD is in correction. It's red. The market school exposure model is at 0. The power trend is off, so the PT does not show up. And Steve Sweats' window of opportunity is closed. So that's also something very significant, or something I give significant weight to in determining market direction. So just not much pretty here at all. We've had some heavy distribution days. We have 7 on the NASDAQ. There's a total of 7 on the S&P 500 and a total of 7 on the Dow. We've also had clustering on the NASDAQ and clustering on the S&P 500 recently. We had rally days here. They both failed in one day, although the rally day on the Dow did not fail. So just remember that. And then the NASDAQ and S&P 500 both had a second rally day here. So that's 1, 2, 3. So we're 4 days. Monday will be the 5th day. So they're long enough that we can look for a follow-through day on any of the 3 indexes there. So let's go back. Yep, I think I covered all of that. Go back to the presentation. Went through all those. So let's look at our or my list of red flags right now, just showing how tough this market is, the current diagnosis. So IBD's in correction, distribution's elevated. I put 767. I need to double check it. Maybe it's 777. I'll have to go back and look at that. So we have distribution that was clustered. That's like distribution on steroids. So we had 4 and 5 days on the NASDAQ. All it takes is 4 and 8. So that was a very fast 4. We had 4 in a row. The things I put asterisks beside are the ones I put more weight on. Buy sell day count that we just looked at, 6 buying, 12 selling. So it's a distribution dominant tape, not an accumulation dominant tape. As of Friday's close, that can change. MMTS are all red except for the small caps, and can the small caps really lead the market higher? Not normally. Accumulation distribution in the newspaper on all 3 indexes is still at an E. The ARC funds, which are a pretty good proxy for the growth stock market, they all have ugly charts on pretty much all 6 of her ETFs. The power trend is off. That's very significant. The window of opportunity is closed, 3 asterisks. That's very significant. We're seeing a lack of setups in the traditional growth stocks. Again, what's working? Oil, gas, fertilizers, and coal are all strong. Group teaching portfolios, 92% cash. So again, the rules have pushed us to the sidelines. That's significant. Moving average lines are in the wrong order. Some have turned down, and the 50-day is serving as resistance on all 4 of the main indexes, as I already showed you. This one I gave a lot of asterisks. The NASDAQ is not trending above an uptrending 50-day moving average line. That's when Canslim works better, when the NASDAQ is trending above an uptrending 50-day moving average line. And also the NASDAQ is not trending above an uptrending 21-day moving average line. This is when Canslim absolutely works best. In fact, Justin Nelson, I think even commented at one time, is like, you can almost just use the 21-day line as your own off switch. It's okay to buy when the NASDAQ's above it, and when it's under it, it's tougher. So maybe you're not buying. I'm not saying that's a rule. I'm just mentioning that. The AD line, advanced decline, that we already looked at, is poor on the NASDAQ. New lows are exceeding new highs. That's sort of showing us that weakness. And our secondary indicators, such as the put call ratio and the bull bears, they're not at extreme. In other words, they're coming down some. I mean, the bulls are down to about 40%, but they aren't down at extreme levels where you see fear, capitulation, which often can be a bottom if we get in a really bad market, which we're not in yet. And the put call ratio is just middling. It hasn't spiked, showing fear yet either. And then I just threw in here, last week we had 7 IPOs. Every one of them were not making money on the company side. So I just point that out. Sometimes they're bringing out all the junk right as the market's getting at its worst. So current M interpretation, right now, the buy switch should be off for most Canslim investors. We're looking for a follow-through day plus, question mark. The plus being we do want to see growth stocks setting up in full and proper basis, but we're still going to follow the rules if we get a follow-through day, and we'll discuss that in great detail at our Tuesday meeting. We always want to beware of the fear of missing out pandemic. Quite frankly, there's always something working every day. The question is, we need to focus on the fish in our boat, the Canslim stocks, and the fact that something that's not Canslim is working is not really helping me on market direction, nor is it helping my portfolio because I'm probably not in it. So that's it for the M factor. Things coming up in the weeks ahead to be aware of. EPS season is really going to ramp up starting this week, particularly with the banks leading off and then getting into the tech stocks. We have Delta COVID variant. Seems to be easing off a little bit, so that's good. Chinese government continues to destroy Chinese businesses. Just a new surprise every week. You have the Evergrande situation. Are they going to default? Are they going to collapse? Seems like they have debt payments due every week, so that's going to be an ongoing saga. November 2nd and 3rd is the next Fed meeting. So we're going to hear taper talk as well as taper timing, I would think. So we'll see. And I think this week the Fed minutes come out on Wednesday from the last meeting. I don't have that on the list. Here in the US, we have the infrastructure bill issues, government shutdown. We have the debt ceiling, which we kicked the can down the road till December 3rd. Super silly. Have a great Thanksgiving, everybody, as we talk about again whether the US is going to hit the debt ceiling. And I think that's the new government shutdown date too. So that'll just be more headlines coming out of Washington. Supply chain issues. We still have that cargo ship parking lot out there off of California. And in EPS season, I suspect we're going to hear a lot of companies talk about supply chain issues, not just chips, other things. We've already seen it with Nike. Bed Bath & Beyond got slammed, I think, 24% when they didn't meet revenue and blamed it on supply chain issues. So what do we do when the market's in correction? We study. Come to our meeting Tuesday night. We're going to cover a lot of relevant stuff for right now. Go back and listen to webinars and podcasts with Jim Ropel, the Investing with IBD podcast. There's several of them where he's on there. He has an interview with Richard Moglen. Just great encouragement when things are not working well for us. Go back to the old Market Smith webinars with Bill O'Neill and Scott O'Neill. Every one of those is good. Review materials on rally days and follow-through days, articles and webinars. We're right in the midst of that. Make sure you know the rules. Go do some post-analysis on your trades earlier this year. And just keep in mind, sometimes cash is the best position now. It's not going to be the best position forever, but it is for now. And that could change on Monday. We could have a great follow-through day. Want to be prepared to be flexible when things turn up. So we just want to be ready. And then a couple of charts. Hop back to Market Smith. Let's just look at last weekend. We'll just look at my top tier watch list because we covered that at our last meeting. So, and we're going to be going over it again this meeting. So let's just look at what I had 5 stocks, and really Star Bulk, that shouldn't have been on my top tier. That should have been on the second tier. So I'll go in and move that. So I really just had 4 on the top tier. So let's see what they look like this week. So EVR, again, these may break out, but the buy switch is probably off on most of these because we don't have a follow through day. So this one, we'll go to weekly charts first. So this one is setting up, has Canslim numbers, good return on equity, good pre-tax margin, trades 43 million, has some funds in it, and stage 1 base. So that's good, 18% deep. That's looking good. 3 green dots on the earnings. I've got to add that in there. APPS made my top tier. Let's go to a daily. Yep, so you can sort of see a sloping trend line. So if the market was not in correction, that one, that would have been an early alternative entry to start a partial position, I think, or could have been potential entry. Indava, so this one's a little bit extended. I think it was right at the top of the buy zone last weekend. So it's extended, so we don't buy extended, but it could easily pull back into that buy zone. And then Louisiana Pacific, sort of a commodity play with building materials, wood, but you can see sort of, I don't think I drew it in, but see if I can get it. Could draw a trend line across there, or sort of a horizontal one there, and it's tightening up. This is kind of the Minervini VCP, you can sort of see there's a trading range there, and then here's let me just draw it so you could have sorry, one there. It's not letting me do it here, and then you have a narrower one there and there. So that's kind of looks like that Minervini VCP volatility contraction pattern with volume kind of drying up. So that can be considered constructive. So that's it. Again, Star Bulk I wouldn't have put on my top list. And then add-on buys, well, we don't have any docs anymore. It had a poor week. Just watching it, studying it, see if it can build a base. And then Dexcom, this is the only one left in the group teaching portfolio. So this is the first pullback to the 50. So possible add-on buy point there, but we're in a correction. So we're watching to see how that one acts. And of course, we have to watch earning dates on everything because we're in earning seasons. So those were the charts I wanted to look at. So as far as our meeting, so here's the agenda from our September meeting, which we just had. So we spent almost the whole 2 hours going through how to have a complete weekend routine for Canslim investors. This, because there was so much material, some of these were almost a 30,000 overview. I didn't want to give you just one half the routine. So in October, I'm going to go back and give you some additional details on some of those key steps, deeper dive on some important ones, including more on sort of what are the aces and the face cards in Canslim analysis. Everybody says, what's the most important thing on that chart? What's the litmus test, the one key thing? And there's not one key thing, but there are a top 10 that are really important in my analysis, or a top 12. And so we'll go through that and I'll kind of say, hey, these are the aces and these are the face cards, the things I really focus on when we're comparing one Canslim stock to another and deciding what goes on our top tier watch list. Here was just a little review that somebody was kind enough to send me on the weekend routine webinar, the one we did in September. So you can read that. I won't pause here very long. You can pause it. And so also on Tuesday, we're going to do educational topic number 2, which will be the O'Neill Rally Day follow-through day system from A to Z. And that'll include what is a rally day, what is a follow-through day, what is a failure of a rally day, what is a failure of a follow-through day, what are we supposed to do on a follow-through day, can you buy before a follow-through day? We'll talk about that. And then we'll also talk about subsequent signs of strength after we have a follow-through day. And this is material that is not in O'Neill's book, but has been covered on IBD Live, which is the great thing to have about that. And so we'll talk about some signs of sort of super strength or super size and a follow-through day as we go down the road. So here's the list of the prior monthly meetings and things we've covered. These are recorded and available to order. I tell people all the time, if you don't have a written set of sell rules, this is a great thing to work on right now too while we're in a correction. It took me 3 meetings to cover that topic in detail, walk through every stage of a Canslim stock on that Market Smith chart, and help you write your own set of sell rules. And in the third meeting, I went through and shared my sell rules at that time. They can always have been tweaked a little bit since then as we do post-analysis. But those, if you don't have a set of written sell rules, I really think those 3 would help you take your trading to the next level. I haven't had anybody call me or email me and express any disappointment after they work through those. And then here were some other meetings we did to hold or not to hold through earning seasons in August. So that's relevant because we're coming up on earning seasons again. We just don't have any stocks left, so we don't have to make that decision, do we? And then what we did in September. So the meetup websites are the Greenville Eastside IBD meetup site and the Stockyard meetup site. Everybody should join the Greenville Eastside one. I mean, you just sign up. There's no fee for any of these. And then the Stockyard Meetup site is where we coordinate monthly meetings. So go to the Stockyard Meetup site if you want to RSVP for the meeting on Tuesday. And if you're a first timer, I will send you a courtesy copy of last month's meeting, which you would need because this month's going to build on the weekend routine a little bit, as well as have the new segment on the follow through day and the rally day system. Here's my email. If you need something on one of those prior meetings, you can shoot me an email and I'll get you the list of them and ordering instructions. The tuition for those is $10 each, the same thing as if you attended the meeting live. Those will go up first after the first of the year for the recorded ones. I really hope people attend the live meetings or sign up for the live meetings and get it when they first come out. And then you also can go to my YouTube page, which is the Stockyard by Greg Morton. Just search for that on YouTube and you'll find it. Like and subscribe. That's where you're watching this weekend video. And there's a teaching video on using the group teaching portfolio. Our entire May meeting is uploaded there, which was on the IN Canslim. So just so people can have a sample of how I run the meetings. And then there's a 30-minute teaching video on there on the 8-week hold rule, which isn't even a rule, it's an exception. It's also called the certainty 8-week exception. So I worked through that in detail and tried to clear up a lot of questions because I think there's a lot of confusions around that. So that's it for this weekend. Hopefully I'll see a lot of you on Tuesday and we'll make some progress and at least get educated during this correction and be prepared if we do get a follow through day or if our rally days fail, we get more rally days and follow through days down the road. So that's it. I'm out of here. You guys have a great weekend routine.